It seems to me that you're building sort of this chain link, if you will, for real estate, kind of an oracle that knows everything, all the data in the real estate universe.
Here we have Sebi Rubino.
My guest today is Sebi Rubino.
We're the real estate oracle.
And you're doing this having come out of both real estate and DeFi. You were at Compound for a little bit.
Thank you for having me, gentlemen.
Sebi of Resi.
My whole family's in real estate. Great to be here. I'm a big fan of the show.
All right, great. Hello, everybody. My name is Sebi, and I am building Subnet 46 Resi. What we're building is end-to-end real estate tech intelligence. So we are not building applications. We are enabling applications to be built for this next revolution of information, which we call tokenization, right? In the beginning, we saw the presentation about Bitcoin, and part of it was we had transitioned from a paper-based society to a digitized society, and another transformation is happening today. It's why we're all in this room, to be quite frank, and it is from digitization to tokenization. And that revolution is extremely important because it puts the power back into our hands, right? We've been watching all of this like meme series of these gentlemen joking with each other, but there's a lot of truth to it, and the fact is it's because we have these overlords that we can't trust, and hopefully Resi is a means to ending that type of society, and I think that by the end of this you guys will have a grasp on how we do that, and we are trying to be responsible for improving the real estate industry through what Bittensor enables. In this presentation, we're going to look at the real estate industry. We're going to look at the components that make up a real estate transaction that enable those services to even be possible. And then we go into how Resi applies to this equation. And then at the end, I look forward to fielding your questions. Wrong button, right button. The future is tokenized, right? So I talked about this a bit. You have Vlad, the CEO of Robinhood, talking about tokenization. You have Larry Fink, the BlackRock guy, talking about tokenization. And this is an unstoppable force, not to beat a dead horse here about it, how imminent this tokenized future is. But we already have tokenized assets, right? We have digital assets, they're tokenized. We have stable coins, which are in essence tokenized treasuries. I don't have it up here because it would make all of these other alternative tokenized products almost look obsolete. But you have private credit treasuries, not including stablecoins, commodities and private equity. These are all, I'm sure a lot of you people work in these industries and offer these services or trade them or know somebody that has. But the fact of the matter is we can tokenize them today because we can price them. I have this saying that I just keep repeating, which is you cannot sell, nor can you lend, nor can you borrow against what you cannot price. And in a tokenized future or reality, that pricing needs to be in a provable and permissionless manner. All right, we're going backwards. Let's go forwards. So the big problem and what we want to enable for real estate is first the trustable tokenization of property. We'll talk about what this enables, but today, in the real world, when you buy a property, or let me see, in this room, how many people have purchased a property? Amazing. All right, so you guys are going to get this. And those who don't, I'm also going to make sure you understand it as well. When you buy a property, right, and when you rent a property, you go and see it, right? I'm at the top here. Let me use this. Boom. I'm at the top. You view the property. You say, okay, I see it on Zillow or whatever, homes.com, and I go to it. So I get to see the property. Then, throughout this process, you have inspectors and appraisers. They go and verify the value of this property. And then you purchase with a mortgage or you purchase with cash, however you want to do it. But at the end of the day, you traditionally do not buy a home without verifying its value. But today, now we're down here, if you want to tokenize a property, if you want to raise capital via tokenization in real estate, you take a property, oh, we have this, take a property, you essentially put it into an LLC, and that LLC then becomes tokenized. But when you list on the platforms that are available today, you have no property inspection, you have no validated images even of this property, and the essence of this creates a first-party pricing. No estate agent or realtor is pricing the property, nor are you getting the validation from appraisal. So you guys could assume, I'm not going to buy the property, right? I don't trust that this is good data. I have no way of having enough trust to buy. So we solved this. This is our first product, and it is, like you heard Mark say on that pre-speech video, we are building a real estate oracle. Oracle meaning source of truth, the same way that Chainlink prices digital assets. Digital assets are a static asset in a dynamic market. We are pricing real estate, which is a dynamic asset in a dynamic market, right? Every home is different. Every Bitcoin is the same. How do we do that? So you have property. That property, through many different mechanisms, is pushed through our subnet. And what our subnet does, especially the appraisal model that is in development, is able to be accessed by companies like Proppy, also companies like Chainlink, who can then offer this price feed to their investors. So now there is a third-party pricing, enabling investors to say, wow, I want to buy this. I understand it. I understand the yield is real. I understand the quality is correct. And this is a great investment for me. So that is how we fix the cold start problem that the real estate industry is facing in this tokenized world. So let's learn a little bit about real estate. Right? We understand how the oracle works, but Resi is, like I said, end-to-end infrastructure for real estate companies, but also, and ideally, real estate technology companies. You can see this as Airbnb, Zillow, Open Door, right? The iBuyer companies, REITs, hedge funds. But everything starts with data. Data comes from the county, traditionally. Every jurisdiction or every market is different, but it's either done by the county and published online, or it's done by the county and you have to ask them. These companies, Atom and Cotality, have collected that data. This is a $15 billion per year industry in terms of revenue. I throw up a lot of numbers, so I'll make sure I tell you what number it is. This isn't value in the companies. This is per year revenue by data companies. These are just raw data companies. The companies that then repackage that data and then sell it are going to be these appraisers, inspectors, and also the platforms that sell insights to investors. This is $50 billion a year. And then you have real estate agents, right? You have iBuyers. You have all of the people that are executing real estate transactions. And on a yearly basis, this is kind of unbelievable. $1.5 trillion of our money goes into their pockets to enable these transactions. And everybody's got to eat, right? But at the end of the day, there is almost like a mob mentality to these types of systems, which is the reason why really Bittensor exists, to negate these types of circumstances in life today. So real estate is a $300 trillion market, and it's broken up by those layers that I explained. What I want to do now before I go concise into our product offering and more of our structure specifically for Resi is talk about some of the exciting opportunities that this type of technology allows. Today, if you buy a house with a mortgage, you have to put a down payment on this property, and then every month you have to pay the interest. Right? This is your mortgage payment. With this type of technology, and that's because you're interfacing with a bank, right? And we saw the videos today and how preposterous it is to deal with these types of individuals. But in a tokenized future, imagine buying a property and putting a down payment down, say 10%, and being able to live there. But instead of having to pay a monthly mortgage, you just had joint venture partners in your house. And instead of them charging you interest, they came along for the ride. And they, instead of making money on interest, made money on the appreciation with you. So now we have a circumstance where young people can actually afford a house if we can enable this technology. You don't have to go out there and do a 50-year mortgage, which is an incredibly stupid idea to get involved with. You're only making the bank richer when you do a 50-year mortgage, by the way. So that is one of the ideas that technology like Resi enables. Right? We can pool capital communally and offer it either as a mortgage or offer as a joint venture. And let's continue. So this opportunity, this $300 trillion industry, let's go into how we are attacking it now. I talked about the huge picture. We are attacking the appraisal problem. Right? We're going back to this idea of an oracle. Right now, there's $300 million worth of real estate tokenized in the USA, that is. This is USA on-chain real estate sales and lending. On a global scale, this is $30 billion. And then in the on and off-chain world, you have that $300 trillion worth of value that needs to be serviced. And the big number to really focus on and grasp is $1.5 trillion worth of our money going into the pockets of the executors of transactions. Right? Everything else, the 15 or 50 billion, is negligible compared to that $1.5 trillion per year revenue mark. So how do these builders that we are building technology for interface with us? We'll get into why they do and how we create this technology, but first is with the data API. We keep it really simple. You can either pay a subscription or pay as you go. And what we're most excited for right now and going live with in Q1 is the property appraisal product. This is where we charge 0.2% per transaction, and we act as the inspector, and we act as the appraiser. This allows tokenization platforms to simply have a $99 subscription for as many properties that they want to sell, right? And in comparing this to a brokerage that charges you $9,000 a year or $25,000 a year just to be a broker or a realtor there is insane savings. But then we charge per transaction. So we want to really align our product with success instead of failure, right? I don't want to make money just to do an inspection or just to do an appraisal. I want to make money if that inspection and that appraisal creates a sale. And then infrastructure. So shout out to Mog, who presented Hippias earlier and talked about building a side chain with his alpha token as the gas token, right? Every time you need to transact there, you spend the alpha token, you essentially pay that out to the validators, or burn it. I got to learn more. But we also are developing a side chain. This is so the builders that access our tech, they can stake our alpha, and depending on how much they stake, they will have savings on our product. And then if they launch on our side chain, they will be able to LP with our alpha and send their users to our side chain to spend more alpha, right? The whole idea is to take all of our revenue and all of the distribution that we have access to and drive that towards our alpha token. That is everything for us, other than building great products. It's a little bit confusing, so feel free to ask questions later, but that is the data, property, appraiser, and infrastructure cooperation that we're providing. So let's bring this to life a bit more. One API to rule them all. If you have a real estate technology company, we call this prop tech, you will just need Resi. Now, we are going in this direction. We're not there today. But this is a materialization of this reality. What this looks like is being able to say, what is the average price of a home in San Francisco? Or in this one, it's Nashville. We will tell you that. This enables products like prediction markets, where big money lenders or real estate investors can actually hedge their investments and lock in a fixed return on capital, that plus 15% that you need to keep up with inflation. They can make that possible with a product like this. You can also ask questions like, hey, I want 12-foot ceilings in my living room. I want a house that's black on the outside and it has a pink roof. Find it for me. And we probably won't be able to find it because that doesn't exist, but we will search for it. And more realistic properties will be shown to those looking for them. So this is just the catch-all type of idea for Resi. And we will build models and agents through our subnet that enable this future. One of the more immediate use cases is our appraisal. How does that even work? Here we have a platform called Commertize. It is much like every other real estate tokenization platform. And they are set to do $600 million worth of tokenized commercial listings in Q1. The team barely sleeps, making this reality possible right now, where you have an appraisal powered by Resi, so that investors in these properties can come in and purchase shares of these properties, these businesses per se, with full confidence. So Q1 is going to be a blast-off moment, we assume, for Resi through just this relationship, right? $600 million worth of real estate is nothing to scoff at. All right, so this is a bit more of how we make this possible. I'm still focusing a lot on the appraisal product here. And I also want to give a shout out to BT Labs. We have Jose here. His team and my team, we've been working diligently about this. Enabling a model competition framework and a validation framework on Bittensor, staying in line with the values and the unwritten rules of Bittensor to make it happen, and doing it in real estate. Right? Many people, as one other team has tried to do this in real estate, and it did well, but then failed. But we're coming with a twist. And that twist is really shown here. So our subnet mechanism is soon to be launched. Right now we're collecting data to enable this competition. But this competition uses computer vision. I think last time you guys had this event, Max Sebti from Score presented. And we use Score and also, shout out Mog again, Hippias to store the data needed to provide to our miners so that they can go and create models. And these models predict property prices. We then take the highest performing model and then we put it into our product. It's as simple as that in terms of incentive mechanism to product to revenue. Now, that is our next incentive mechanism. Let's talk about our overall business structure, how we're thinking about the business, the flow of value, and what's prioritized by us. My theory is that superintelligence, and to take a step back, Resi stands for real estate superintelligence, but superintelligence is a matter of combining multiple narrowly intelligent models so that you can come up with these unfathomable, almost like magic outcomes. And that's like doing a property in one click, or property transaction in one click, right? That type of magic, it comes from taking an appraisal model, an inspection model, a title model, a legal model, and making it all available in one place. So that's the naming and how we see it at a macro level. On a micro level, how do you create the narrow intelligence I just referenced? It is through our subnet and sub-subnets. Right? The value of a subnet of our company, Resi Incorporated, is derived by the sum of the value of our sub-subnets. And each of these models, appraisal, inspection, title, legal, we have other ones like underwriting. And to iterate again, appraisal is the start. Right? This is where we are starting. This is the cold start solution to the industry. That intelligence is then wrapped up into our API and then is accessible by builders. Okay, a lot of information, but that's our incentive mechanism that is coming out very soon and how our company generates value for the world. The team, you have me. I'm the CEO of Resi. Like you heard in the video before, I worked for Compound Protocol, I worked for Maple Finance, and the understanding of DeFi, the understanding of working for an RWA company has really ingrained into me the fact that this future of tokenization is here. Real world agreements, real world assets are all coming. Caleb, my CTO, he's built nationwide real estate data products, and he's also worked for a company called Reology. This is one of the top real estate technology companies, data companies in the US. And then I see our miners, also our validators, as our team. So the slots that we have, the miners and validators are part of this core team. I am the marketing and product and overseer of our incentive mechanism with the right partners. But our miners are our R&D. We have embedded an embedded R&D department into our business, which is almost a moat within itself. And then advisors such as DSV, love you guys. Michael D. White, who is the CIO of Crane Capital in the States, and will be soon using our appraisals and inspections for his commercial real estate investment firm. And then Adam from one of the largest validators, Roundtable 21. Everybody's been a great help. And yeah, it's been a lot of fun. It's been very exciting as a subnet owner, I must say. We're about 75, 80 days into this journey, but we've made insane progress. And the next few months are going to be quite pivotal for us. So my call to arms. First is staking, right? This is staking in or it's buying in Bittensor terms. We call it staking. And this allows you to own a piece of, think about it as owning a piece of the infrastructure that allows Airbnb, owning a piece of the infrastructure that allows Zillow, but those products of tomorrow, right? Imagine owning Chainlink in its early days, right? Here's an example for you guys to make the value make sense. Chainlink secures I try to say $4 billion or $4 trillion industry, right? Crypto. I think today it's like $3 trillion after this last week. But real estate is a $300 trillion industry. And I believe that we will actually have a very high chance of crossing Chainlink in total value secured. This is how they essentially measure their growth, right? How much value in assets, right? TVL in crypto talk, is secured by Chainlink. Mining. I know we don't have many miners in here, but if you do, and if you understand real estate, I invite you. And then something that I'm very excited about is onboarding applications. Right? We are infrastructure for applications. We are not building these applications. So if you or a loved one is building applications in real estate, have them reach out to us, and also come and propose a subnet. We don't know what we don't know. And if you have ideas and you have the need for R&D through a network like Bittensor, but you don't have a subnet, you don't want to buy a subnet, we'd love to foster that research and development through our pool of miners that really understand real estate. Okay. Thank you very much.
Any questions? Oh, shit. Oh, yeah. There we go, miss.
Does the appraisal work? Do they just go take photos and then submit it, and then from there, miners will then validate it from there and give a price point?
Great question. I'll start from the backwards and go to the start of the question there. How we validate the model is by benchmarking against data that hasn't gone public yet. So we have a submission window for models to be created. Once that submission window is closed, we wait 24 to 48 hours, and then we use the data from that 24, 48 hours to validate the model. And what that looks like is saying, all right, who sold and closed on the property in the last 48 hours? Let's take 1,000 of those properties and run them through these models. Whoever is closest to the actual price that it was sold for, that is the highest performing model, right? We are in the business of reducing the delta between inference, right, prediction of price, to the actual reality of what that property sold for. I forgot to mention this, but with Zillow a few years ago, and I'll get to the appraisal part, I won't forget, but Zillow a few years ago made a program that said, we're going to offer people cash for our Zestimate. They thought it was like their Zestimate was always right. And what happened was Zillow lost $4 billion because the deviation, that delta from price to what it's actually worth in their case, is around 7 to 14%. Which, if you're buying property or if you're buying assets and you're losing that type of value on every transaction, you are going to lose that type of money. So we are very excited to benchmark against their Zestimate as well, and other pricing engines. Now let's go into the appraisal. How does the appraisal work? We take that model and we take the highest performer, and that is what is accessible through our API. So we have two types of appraisals, a soft appraisal and a hard appraisal, or a full appraisal, however you want to say it. The soft appraisal is where we get validated images from the homeowner. So this is them sending us pictures and taking a video and us analyzing the data of those files to confirm, yes, that property is still there, it's still standing, no squatters are living there, and what you're saying is correct. That's what we use for a soft appraisal. For a hard appraisal, we actually get an inspection done by a certified inspector until we create the agent for that, or the model plus agent for that. And yeah, the way that differs is quite huge, right? Just having pictures or having a certified individual say, no, the piping needs to be completely redone in this house. That is a big difference. But we're going to leave that up to our customers, the people who are using our API, right? And right, we start with appraisals, and then we move to inspections so that we can actually reduce the cost to our end users of that inspection. Does that answer your question?
Yeah.
Any other questions?
And then just on that as well, then what's stopping the person from taking photos and the video from using AI to alter the price that could be appraised, to either lower it or...
Right, so there's a few things there. It's how can I take the picture and the images and mess with the metadata and completely just screw these people over? And then you also have, like, how do I just generate images with AI? Right? Luckily, there's AI detection. I think it's called BitMind on I could be incorrect, but I see some nods. Yeah, okay. BitMind on Bittensor, and that basically says, is this image AI or is this real? That's one. And then two is then just making the secure application or API that takes the images, right? And we do that through the iPhone camera and Android camera, whatever's on your phone. And the big part of that is knowing where you are, right? So we need to be able to use location services from the phone, which is a verifiable source of data, and then say, yes, okay, they took that picture at that property. It is worth this much. Go ahead, go tokenize it, right? The reason why we have a primary and secondary mortgage market, which is huge, is the fact that we can have appraisals. We can have mortgage insurance. We can have inspections. They all play together, right? And we can't get this tokenized future without those steps being completed, the pipes, per se. Question?
Hi.
Hi.
Firstly, thanks. So opened a real sort of can of worms in my head about where this could go and stuff. But I've probably got 25 questions, but I'll try and sort of dumb it down to like the most sort of important two. Have you done any research in how this kind of integrates with like a REIT? So,
Yeah.
Which is kind of semi-tokenized, I guess, but
Yeah.
this is kind of adding another layer of tokenization to a partly tokenized industry. Specifically, like if you had a lump of assets, maybe a couple hundred properties or something, and the rules around a REIT in the UK, obviously, that has to pay out, I think, 90% of its returns to its investors, right?
Right.
And it has to have an institution involved, but an institution can qualify by maybe being some sort of fund or even a pension in the UK. So that's something I'm doing a lot of research into at the moment. So I guess with the 90% payout bit, if you could then tokenize that and then maybe outsource or offload a proportion of that to sort of your market, is that something you've looked into and how that could plug in?
Yeah. Well, so let's go through the flow of that. Right. You have an entity called a REIT. This REIT has shares. REIT is a real estate institutional trust, I believe. Right? It's a trust that purchases property, and that's it. That's literally it. Purchases property, and it generates. It's like a DAT, a digital asset treasury, but for real estate. You can't have a REIT on chain unless you can tokenize its value, or verify the tokenized value that makes up that company. So that is one of our favorite use cases, is allowing people to go make a real estate fund, and it's more centralized if you do it in the form of a REIT, right? Or you create a platform that allows people to pick themselves, right? So even these tokenization platforms, they have a lot of similarities to REITs. It's like, take your pick. Which one of the houses, available do you want to own a part of? The only things that you need for a REIT is being able to tokenize it and say, okay, well, here are the shares of this REIT, the company, or the entity. And then if you go to a REIT, they have all these filings, right? And in these filings, they say, we purchased this amount of property with this type of debt. It yields this much. And then we also have a bunch of these fixer-uppers that we're spending money on. You get the whole picture. You can't do that in the current status of on-chain real estate. But with Resi, with just the appraisal alone, you can have that type of transparency. And you could say, hey, we own all these properties. Here are our wallets that own these tokenized shares. And also, here's the on-chain provable and permissionless data that backs up those claims. Right? Nobody is going to invest in anything they can't validate in the future. But the whole reason we come to this tokenized revolution is because our trust in these big institutions is failing. I hope that answers your question.
Yeah, and created loads more, so that's good.
Nice.
Ask more then. Don't hold back.
Yeah, ask more.
Sure, I suppose, okay, from development lending, so a lot of your examples were kind of asset-backed, large commercial assets. So I guess it kind of links in with the kind of crowdfunding model, right, in terms of a tokenized loan. So
yeah,
the blockchain offers opportunity to, like you're saying, to circumnavigate some of the issues around sort of tranche drawdowns in terms of adding value and then, recouping that amount of funds and then spending again. So I see this as quite an efficient opportunity to unlock kind of development lending, but it's kind of peer-to-peer, but not like it's tokenized, right? So I guess there's a whole realm of regulation to kind of delve into with that. But
I would disagree on that point.
okay,
What do we need to regulate, right? With a bank, you're going after things like mortgage insurance, right? And you're asking an institution that has all these licenses and a charter and a this and a that to give you a lot of money, right? Whether it's to buy your home or to do a development deal like you're talking about. The reason why I give pushback on the regulation aspect is not just to be like some renegade pirate, but it's to say you just need money, right? If you had the money in a joint venture with you and your super rich, 5 friends, you could just buy the deal and that's it. That's the argument here, is that if you have pooled capital from us, right, your friends, you don't need to deal with all of this regulation, all of this red tape, all of the lost deals and timelines that are traditional in today's industry. Right? If you want to build a skyrise, you need money to buy the land and pay for the construction. So you create a pool, people pay into that pool, and you do it. It's the same as the way that you would do it with a bank, but you can get a little bit more creative. Not only are you more efficient, not only are you faster, but you're more capital efficient. So you have a circumstance where I can come along for the ride with you, the doer, I can be your investor, and I can make money on appreciation of that deal. But if you don't want to do that because you know your capabilities, you could say, I just want to pay interest and bug off. And I will. Or I give you the money, and then you go and pay me an interest rate, more like a mortgage type of situation, and I still make money. I'm happy. Right? So it gives you more options.
does that not breach, in terms of peer-to-peer lending, obviously it has to be done through a single entity, and then so you can't have multiple loanees or silent partners as equity partners in a development deal, for example. So that's kind of where I'm going with the regulation is, how is it getting around that? So does the fund do then a single tokenized loan and people just own a portion of that security?
Yeah.
But then that's regulated, right? So,
in
the UK.
There are things you have to do in terms of regulation, but it puts it on the platform and not you. If you can get investors you've seen crowdfunding platforms. If the platform does the heavy lifting, you don't have to do anything, right? You send them an application, your ID, cool. Then they get the identification, the KYC, know your customer, and anti-money laundering documentation from any investor that's coming in. So I'm not saying here that we're gonna, you could build an Aave from day one and get asset-backed loans, no login, no nothing, you just connect a wallet, right? We're talking about real estate here. So there is some regulation, but it's not the type of regulation that a bank has to go through, which is a massive advantage for you as the developer.
Absolutely. Thanks.
Awesome. Right, massive round of applause for Sebi.